We are joined by a very special guest who's here to talk about the markets. University Investment Scientific Advisor Nassim Taleb is here. He's the author of The Black Swan. We always love seeing you.
Yeah,
nice to see you, by the way, in person at the table. I don't know if we've seen you in quite a while.
I came here before, but,
yes.
but it's nice, to see stability. I've known you guys.
We are one sense of stability.
10 years, 15 years?
Yep.
11 we've all been together.
In a less stable...
Time.
I think a dozen years now.
Oh, yeah, it's 12.
A dozen years
turning
now.
12. I'd base it all based on when my son was born.
So help us, though, talking about stability and risk.
Yes.
Where do you think we really are in these markets? We've had Barry Sternlicht come on and just tell us that the Fed doesn't know what it's talking about and that actually things are much worse than we know.
Let's talk a little bit big picture, okay? 2008, we had a debt problem. No? The Fed put the interest rates at zero for 15 years. Now, lowering rates to zero made no sense. They didn't try, they panicked, they didn't try to lower it to 3%. They went all the way to zero. And once it's at zero, it's very hard to raise it.
Right.
So now we're going to have to learn to live in an environment with higher interest rates. And 15 years, that's a generation of traders, a generation of finance practitioners who don't know what interest rates mean. So welcome to a new era. So new eras, we have more debt than we did before. The Federal Reserve's primary job is price stability. And monetary policy is something that is, short term. They used that tool
right,
in place of a structural reform. You see, you can't use, it's not made for that. So that's a big mistake, and we're going to pay the price because we have a lot of debt.
When does that price come? What does the price look like?
I don't know when it will come, but let's look at what we have. It's more than $100 trillion of real estate valuation. Okay, we're not at 3% mortgages, we're at 7% and going north. Okay, so, and you have a lot of the methodology of the startup business changed. In the past, they used to be selling you a future cash flow. Now they're selling you future funding, like you're going to sell it to someone else. So the whole structure needs to tumble. Okay, it
needs to tumble.
Yes,
like 2008 style tumble.
Probably because systems don't correct themselves without some kind of a little bit of pain.
So you think a true crisis is coming?
The risk is right there. Okay, we know we have real estate valuation that don't make sense with interest rates, short-term rates at 5.25%. We have startups that basically were using the funding market to as cash machine, and it's not sustainable. The stock market is another story because the stock market seems to have some, it's probably more robust than the others.
This doesn't even sound like a Black Swan event. This sounds like a
White Swan. It's a White Swan.
You're saying
event.
It's right in front of us.
The risk is in front of it. You see a fragile bridge, all right? The bridge that's fragile. Okay, it's going to collapse at some point. Okay, so you need to fix it. How do you fix it? You got to reduce debt. You got to do a lot of cosmetic things that are not cosmetic, actually. Sorry.
If you don't believe in MMT, the binge that we had at zero was much larger than any binge we've had in the past. If you really do believe in comeuppance or hangovers, however you want to characterize it,
exactly.
We haven't had it because this has been the mother of all binges, but we haven't seen it. There are people, Nassim, that they argue with me all the time that the strength of the dollar, they don't think it's ever going to change. So we're able to print. We're the country of record on the entire planet. We have this ability to print that's never going to go away, so we can spend as much as we want. That's the MMT people.
No, MMT made no sense, but people bought into it because it was, again...
You can make a case for it because we can always print money because the dollar is the standard for the world.
Yeah, the Germany was a power, okay, and they printed, okay, so it's not like...
We've seen it. I know, they seem to ignore history.
They don't have history books.
I sent them a picture of a wheelbarrow full of cash when they argued.
Though, to the extent you're right, and one of the things you did ahead of 2008 was you hedged. The question is, if you were an investor today, given this fragile bridge, what would you do?
It depends. If you can't tail risk hedge, which is, I'm not going to sell tail risk hedging because
you can try to sell tail risk hedging if you'd like.
But if you're an individual, you have to be stay away from the two businesses you're going to stay away from. New technologies, particularly the ones that are connected to AI, because it's going to be very unstable, and the other one is real estate. And if you're a professional in the market, make sure you're not naked long stocks.
Right.
I mean,